Hello, Maverick Traders. This is Rob Reinhold. It is Thursday, November 30th, last day of the month. Cannot believe that the end of the year is literally 1 month away, but we're not done with trading yet, so let's go make a little bit more money. In this session, we're going to talk about the trading day, what happened. We are definitely in a low volatility period in the markets. We're going to look at the technical scores and see if we have a change in technical scores. And we are always looking for setups because with options trading, it doesn't have to be going anywhere. In fact, if you recognize it's not going anywhere, that can be one of the best trading environments for an options trader. So let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
The market is not really going anywhere, but the Dow Jones got something. Well, we know what it was. Salesforce and Boeing had big days. Now, the Dow Jones Industrial Average is I'm just going to be blunt. It's a stupid index. Why is it a stupid index? First of all, it's only 30 stocks. That is a very narrow index. And the second reason is that it is a price-weighted index. Now, the S&P 500 is not price-weighted. If you look at the heat map, you can see that it's weighted by market cap. How big a company is how much it affects the total S&P 500. The Dow Jones is not weighted like that. It is a price-weighted average, which means the higher the price of the stock makes it a bigger impact on the whole thing. Now look, we all know the price of a stock doesn't mean anything. It's the market cap of the company. But we have stocks like Berkshire Hathaway that are really big, and we have stocks that are really small, but it doesn't mean those are bigger or smaller companies. The stock price doesn't mean anything. So what happens is when you have a price-weighted average and the two highest price stocks in the average both have killer days, Salesforce is up 6 or 7%, Boeing was up 4%, you get these kind of dumb returns when it's really not indicative of the rest of the market. If we take a look at the rest of the market, as you can see, the S&P was only up 0.38, and guess what? Pretty much all of that came in the last 15 minutes. It was flat for most of the day. The Qs were down, but the Russell was up. As you can see, this is the kind of day we had. We had an up 0.2, 0.3 kind of day, not the 1.4% out of the Dow. Oil got hit, gold got hit. Look, oil was up 4% over the last 2 days. It gave it back. Gold was up, it gave it back. Look, nothing really happened. This is a really, really flat market. And if you take a look at the advanced decline line, it was pretty much right down the middle. But take a look at the 50-day moving average line. It is substantially bullish. We have most stocks in bullish territory above their 50-day moving average. And well, let's take a look at this chart, because this chart is going to at least tells me everything. It tells me absolutely everything about where we are in this moment. Ever since our big bottom that we had back in the end of October, we've been running up and basing, running up, basing, running up, basing. So look, someone could probably make an argument of why this isn't going to continue, but it's just an argument. We all know that trends just keep going until they finally stop. There is nothing in this chart that is telling us it's probably going to stop. And take a look at the volume today. There was big volume. There was big volume in there right now, especially off of the bottom. When we had a down market, we rocketed right back up and closed up at its high. This is a very, very bullish chart. Very, very bullish. And if we come over here, I want to check in on bonds. We haven't talked about bonds for a while. Bonds were down to 4.25%. Now look, they bounced up today a little bit, up to 4.3, but taking back where we were at 5% when the market was really kind of freaking out, we are in such a better position here to be really supportive of a very, very bullish stock market. 4.3% is super, super bullish for stocks. We are in a seasonality period where Decembers are usually up months. We are in a year where people are underperforming the market and need to play catch up. Look, I'm not like super bullish. I remember in 2017 when Trump won the presidency thinking I was super bullish because no one was going to sell stocks in that year because they knew that next year they were going to get a tax break. I was very bullish, and that December was like up 8 to 10%. It was crazy. I'm looking at this December saying, okay, it probably drifts up another 1 or 2%, but that's it. And I don't think it does it on a lot of volatility, and that's what we're seeing in the market. Today was pretty much the mirror image of what happened on Tuesday. Tuesday was everything went down and the big cap tech stocks went up. Today, the big cap tech stocks, they went down. Everything else went up. Take a look at how green it is outside of those stocks. So the big question is, did we get a change? We have been at a +2. This +2 has been there for a while. We are starting to see this 50-day moving average start to turn up. At some point, we will go to a +3. Probably that's going to coincide with the breakout of this base. But look, we could be in this base for another week or two. We have no idea how long this base is going to last, what's going to happen with it. But what we do know is high bases tend to break higher. That's what we do know. So I think we have to take a look at this market and say, look, we're probably seeing some higher prices into the end of the year. December is typically a bullish month. So let's go ahead and take a look at some trades.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
I've got 2 bulls for you today, 1 bear, and I've got to say that it was a little bit more difficult to find bullish trades than it's been over the last couple weeks. We have a bunch of stocks that have done extremely well, and they have rocketed up, and they are a little bit too far on a technical basis, even for me to go and chase. So now I'm having to go down and saying, okay, I want to find some positions that are bullish, but I don't want to look for the underperformers, because just think about this. If the market was rip-roaring higher and you found a stock that wasn't going higher, it underperformed. It underperformed the market. And typically you don't want to buy those in these kind of market conditions because it underperformed. But the ones that perform with the market, they're a little bit too hot. So it was actually quite difficult to find the right looking stock. And I found a few of them here. And this one is Cardinal Health, CAH. Now this one has been a good performer. It's been a good performer, but it isn't overextended like I see some of the other stocks. So again, it's been running up. It's been having little pullbacks. It runs up. We had a 2-day pullback. This is a really nice bullish engulfing candle today. And we could take out the highs tomorrow. This is the kind of setup I like. It's not overextended. I'm not buying it after 3 huge green candles. I'm not looking at that. I'm buying it after really about a month of consolidation between 102 and 107. And now it's poking its way out of the head. So I really like this trade. 110 would be my target out to the December monthly options expiration. So you could take a look at doing a 106, 110 bull call spread. You could do diagonal spreads on this. I think you definitely want to do spreads. This is not a market for just straight long calls. This is more of a spreads kind of market. This one looks really good. Again, you're not chasing it. You're not chasing it, but it hasn't underperformed the rest of the market. Let's take a look at another one. And you're going to see this one is virtually similar. This is Kimiko Corporation. CCJ is the ticker symbol. it has not underperformed, but we've based. We've based here for 2 weeks after some really good movement here. And now we've based, and now we're looking to break out of the top of that base. This one, target up to 47, probably 47.50 is where the next option is. So 45, 47.50 bull call spread for December looks good. Like I said, this is more of a spreads kind of market. So vertical spreads, diagonal spreads, targeted butterflies, things like that. I don't think there's any reason to be straight long calls here. It's just not ripping higher like we like to see in that strategy. Now let's go ahead and check in on a bear. Now surprisingly, the bears were easier to find than the bulls. And I came across this one, Walgreen Boots, WBA, Walgreens. This is at like a 15-year low. This stock is in some trouble, and this is what we love to see. We call this the March of Death. When a stock just goes down, 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 and really what happens is you want to, every time it has a pop, you want to short it. So right here, popped up from 20 up to 22, 10%. Look at that, it gave it all back. Another pop, it gave it back. So you want to short rallies and bases. And you can see here, we're starting to get a base here. This one, the way that these work on their March of Death is that they just keep falling. They keep going down, and then they can have these massive rallies. Now, it's really good to get into these on the rallies. Really nice. It's a very comfortable position. But sometimes we can't get into them because, again, these things just keep dropping. And if you wait for them, sometimes you can't get in them. So I like to get in these and give this trade enough time to where, let's say I was to get into this now, today, or tomorrow, and tomorrow had a rally up to $21. I want to put myself in a position that I can weather that storm, just like back here, wait for a week, and literally be at lower prices. Same thing here, where it pops up, you have to wait for 2 weeks, and it's now at lower prices. That means I'm going out to at least December 15th, if not December 22nd or 29th, or maybe even into 2024 on something like a 1920 bear call spread. Basically saying I think this thing's going to go down 5% in the next month. I'm insulated from the volatility. This thing could come out with great news, pop it up to 21, 22. I don't care. I got my max risk on. And then if the trade is weak, like it's done every time in the past, it's going to fall apart. It's going to fall apart. And as long as I gave myself enough time, I will be correct on this trade. So those are the 3 trades I had for you. Let's talk about tomorrow. There is not a lot on the calendar tomorrow. We do have ISM manufacturing. Typically, the first Friday of the month, we do get the payrolls report. But if it falls on the 1st, if Friday is the 1st of the month, they do it on the 8th. So I expect a really quiet market tomorrow. Just a really quiet market. There's really not a lot of energy out there. Things are drifting higher. I just see this market, going into the weekend on a pretty quiet note, getting ready for next week. That is the Market Roundup. Thanks for joining me. Goodbye, everyone.